Dear students, we will do a new module. This module is module 41. It is about computation of income from self-occupied house property. See, there are certain changes as per the new scheme and the old scheme, that also I will include, and we will do one problem. So this is the easiest computation because no deductions are allowed as per the new scheme. But old scheme also I will explain because interest on loan was allowed as a deduction as per the old scheme. So let us go into the details. So here, income from self-occupied house property. As per the old scheme, what we used to do, that one house property that was helping us to do the tax planning. So I always used to advise the students, whenever you get a job, you save some money for down payment, then you take a bank loan, you will get a long duration loan, then you can buy a house property. The advantage is that whatever interest you are paying, up to 2 lakhs it was allowed. So the loss from self-occupied house property can be adjusted with other heads of income. But now, as per the new scheme, this is not allowed. Certain important changes what they have made, I have to tell you. From assessment year 2021 onwards, 2 house properties are allowed as self-occupied. The advantage is that both the houses, the net annual value will be nil. If you have claiming more than 2 house properties as self-occupied, it is considered as deemed to be let out. So this is one important thing you have to remember. As per the old scheme, you have to remember old scheme and new scheme. Old scheme, net annual value will be nil. Here also it will be nil. Then municipal taxes, it is nil under both schemes, because when net annual value itself is nil, municipal taxes were not allowed. Standard deduction was not allowed, both the schemes. But interest on loan, I told you, if the loan is taken before 1499, 30,000 only it was allowed as per the old scheme, 30,000. If the loan was taken after 1499, up to 2 lakhs was allowed. Now, new scheme, this interest on loan is not allowed. So the disadvantage is that this loss you cannot set off with other heads of income. That I will be explaining in detail under the module loss, set off and carry forward of losses. But this, as per the old scheme, I will do one problem. Municipal rental value 1,20,000, fair rental value 1,80,000, municipal taxes 12,000, ground rent 5,000, interest on loan taken for the construction of house property 1 lakh. Compute the income of self-occupied house property as per the old scheme and the new scheme. So here you have to remember all these values you don't have to consider. Municipal value, fair rental value, municipal taxes, standard deduction. Our computation is starting from net annual value. It is nil. Now, old scheme, less deductions under section 24. Standard deduction is not allowed. Standard deduction nil. Now, here interest on loan 1 lakh is there. Interest on loan, it is 1 lakh. So, as per the old scheme, the loss will come 1 lakh. Loss from self-occupied house property, it's 1 lakh. That's why I am giving it the value in the bracket. So, it's 1 lakh. But as per the new scheme, this is also not allowed. So, valuation of self-occupied house property, the only advantage is that net annual value will be nil for 2 house properties. So, this is the advantage. 2 self-occupied house properties, net annual value will be nil. But the disadvantage is that you cannot set off this loss with any other head of income, which we used to do earlier as per the old scheme. Plus, you cannot carry forward this loss, which we used to do as per the old scheme. So, this is what I wanted to explain in this module, and more problems we will be doing where the complete computation of house property with let out and self-occupied. Then I will explain these points again. So, this is what I wanted to explain as is only that single module for explaining the computation of income from self-occupied house property. Thank you.